Hey traders, welcome back to another recap. So this is a recap of letting y'all see me missing out 2-3 entries in a week. So yeah, I just want to let all of you know beforehand, I'm having my wedding here in New Zealand, specifically in Lake Tekapo, and this week has been packed with a lot of personal thing. I have to manage the wedding, have to take wedding shoots and everything. That's why all of my approach has been all based on limit order. And yeah, if you look at pound dollar here, first of all, if you have a look at my Telegram channel, the setups announcement channel, this is where I coach 400 over traders inside. You can actually see that on 23rd of September, which is Tuesday this week, I talk about pound dollar, Aussie dollar, and dollar Swiss. So particularly, I was focusing on pound dollar. I had sell limit set at pound dollar, and guess what? It didn't tap. So my entry, to be precise, is at 135.39.8. It's all written here inside as well on the chart. And my stop loss is at 135.66.8. So let's talk about the thought process. I was looking for pound dollar short because, first thing, pound dollar has been ranging for some time. I know a lot of people, especially if you are trading the FX market, you probably see this. If it's on Tuesday, you probably will see this as an uptrend. But we have been shorting pound dollar quite some time, several times, and it has been a successful one. I shorted pound dollar at 135.36.9, a 76.9 earlier when price formed a rollover. Let me check my history. Oh no, sorry, I shorted at 136.14. So I shorted once here after seeing price form a TPF. This is not just a setup that I took myself. A lot of traders also took the same entry inside our trade club. Then we started to look for a second entry. Some of them shorted at 135.85. I personally shorted multiple times throughout the past few months. So we have been ranging for nearly 3 months. As you can see, we started ranging in early June, and ever since we have not been able to break above the resistance here at 135.93. So we kept failing at this level. That's why we took one attempt. For me, it was 1, 2, 3 attempt here at 135.24, and yeah, multiple attempts, and all of them were wins. Every time when you have a win on a specific trade idea, it is your job to stick to it. One of the common traders' problem is once they have a win, what they do instead is they start pairs hopping. They go from pound dollar, all of a sudden they are going to euro dollar. All of a sudden they're going to the yen pairs, the cross currency pair like GA, EA, Euro Swiss, whatever. They just don't have a focal point. In your trading plan, if you haven't, you must right now include one important rule, which is every time when you have a winner, you must stick to the same direction. You must not tweak your game plan, and you must follow your initial game plan. So this time around, it was pretty much the same thing, but I have to acknowledge that when pound dollar, when it broke above that 135.92 at the beginning, it was around 15 or 16 of September, we thought that, hey, we could be into an uptrend. But guess what? Right after price broke above the resistance at 135.90, we immediately had that big rejection candle to the upside. And that was when we say that if pound dollar still come back below 135.87, we are still looking for a sell. Why? Because we have took multiple short attempts and they have been successful. But first entry was that 135.87. So we had our first sell limit order at 135.87, and we missed out. We missed out the TPF short entry. For some of you ask, what's TPF? Is trend pullback failure. It's basically a key strategy that we trade. This TPF strategy is specifically to hunt key turning points, to catch fake outs. And a lot of times, when majority of the people were confused or they are being trapped in the opposite direction, we utilize TPF to look for fake outs plus turning point entry. So we waited for a TPF here at 135.88. It didn't come back. So as you can see that we had an initial sell limit at 135.89 and it didn't come back. Right after that, based on our entry model, again, it all depends on your personal entry model. So every time when we missed out an entry, the first thing we'll see is, do we have any BOS? In this case, we had a strong bearish momentum to the downside and we actually broke below one level, which is 135.46. So right after seeing price broke below 135.46 level, we started to shift our entry lower, again based on our entry model. So we shifted our entry lower at 135.39.8, and yeah, that's where I set my sell limit for my second potential entry. And guess what? The high of this candle is at 135.36. So missed out this entry as well, and it dropped all the way straight into my TP. So missed out two entries, and guess what? When price formed a bear flag at 134.63, I was also same thing looking for another entry, but I couldn't take it based on my personal rule. One of my rule is, if the price position is not good enough, I can't take it. That means if let's say I were to short at 134.63, if you all have a look here, my potential RR will only be 1.5 or less than that, because if I take it, my stop loss will have to be at around 134.96, because your stop loss level always has to be based on swing high, swing lows. So if you point at the RR here, is about 1.12. That didn't fit my risk reward criteria. That means we flag it as a poor price position, a poor price position setup. So we won't take it. So I didn't take it. Guess what? It dropped all the way down. But the second entry wasn't something that I'll take it anyway, because it didn't fit my criteria. But this sell limit here, it was pure unlucky, and it's part of the game. So missing out some of these trades, it'll cost me a lot, because all of you know that I risk on average about 10 to 20k per trade. So if I were to risk 10k on this one, that's about 42k. That when you start trading on a larger lot size, minimum 100 200 lots, again humbly speaking, you will start facing a lot of this situation, and it's easy for you to start relating them to the monetary amount and say, I just missed out 42k. But guess what? For whatever figures you're trading, you're just in a different league, but you should still respect the probability game. Like me missing out this kind of entry is completely fine. I call all these entry inside our trade club. Some of them actually caught it. Don't get me wrong. Some traders actually took it lower at 135.27. I received a few messages for traders getting payout shorting pound dollar. They managed to short it before the drop. Their entry was a little bit lower than mine, and that's okay. My job isn't to fit them, but to teach them how to hunt their own food. And that's what we do here at the 1%ers Trade Club. Pound dollar is the first one. Dollar Swiss is the second one. So I also talk about dollar Swiss long at 0.7916. So a quick recap here. It was based on a key level reversal. So we have a key fake out here at 0.7883, followed by a TPF formation here at 0.7918. So some of them took the long, secure about 4 or 5 hours, same thing as well. I decided not to take it because I was focusing on pound dollar. And guess what? I ended up taking Euro Aussie. Again, this setup also fits my criteria. I took Euro Aussie short, and guess what? It's currently running on a drawdown, and I'm nearly getting stopped out. And then guess what? It is what it is. That's part of the game. There are times where you know, in a week I missed out 2-3 entries, and turn out that the only high quality setup that I took was Euro Aussie, and it turned out to be a loss. This thing is also based on the TPF entry. After seeing a rejection at 179.24, I decided to take the TPF entry, again sticking to our initial game plan. We talked about Euro Aussie short some time ago, and whether it's a win or loss is completely out of my control. And I just want to share this quick lesson to you all, to let you all know that, you know, as a trader, your job is to not dwell in all these, you know, probabilistic sort of thing, because I know a lot of traders, when they go through a week like this where they missed out entries, then they end up taking a loss, taking another high quality setup. They'll feel pissed off, they feel disappointed. But really, as a trader, your goal is to focus on a long-term vision. Don't care too much about what's happening in 1-2 trades, or focus on the long-term spectrum. Over the next 50, 100, 200 trades, do the right thing, stick to the process, and you will always come up positive at the end. And we're all here for the long term. And if you currently have a negative week like I do, I'm here trying to motivate you and say that you're not alone, and that's part of the game. So I missed out a lot of money on the table, and I end up taking the only trade which turned out to be a loss, and that's fine. And that's how trading works. Sometimes it messes up with your mindset or your psychology a little bit, but as long as you are proven to have a positive edge, if you are proven to have a strong track record, it's okay. 1-2 trade, they don't matter. So I hope you all learned something new from this recap, from a Red Week recap. And if you like it, please don't forget to like, share, and subscribe. Share it with people, share it with traders who you think they can be beneficial from this video. And I'll talk to you next time. Bye bye.